Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 1st of December 2021. Alright everyone, let's get into it. So, the 1st of December, that means it is the Beacon Chain's first birthday. So, the ETH2 Beacon Chain went live December 1st, 2020. Been a year since then. Wow, the year has gone by very, very quickly. I remember it like it was yesterday, to be honest. I remember being on a live stream, watching it all go down, and celebrating on Twitter that day. I mean, Twitter was on fire that day. It was one of the best days in Ethereum's history because we finally had a Ethereum proof of stake network go live after 6 years of research and development at that point. So it was a huge milestone back then. And yeah, the fact that it's already been a year is amazing. And it's funny because looking back on what the price was back then, I think it was $600 or $700 or something like that. And now we're at almost $5,000. So the price has come a long way since then as well. So obviously everyone kind of is liking to stake their ETH and kind of locking up their ETH in staking. And so on that note, Terrence from the Prylabs team put out a tweet today, just basically with some metrics saying, there's 263,000 validators on the Beacon chain. There's 8.4 million staked ETH, which is worth $40 billion. That's a huge amount of ETH right there, guys. 8.4 million. I think that's 7 or 8% of the total supply of ETH right now. And as I said, $40 billion worth as well, which is just crazy that only 8 to 7% of the supply is worth $40 billion. And we're really only in the the first inning of Ethereum staking, because obviously staking right now comes with some opportunity costs. It also, for most people, they've locked their ETH up, and I know there's liquid staking services like Lido and Rocket Pool and things like that, but when you look at most of the stake, I think it either belongs to centralized exchanges, or it belongs to home stakers that staked from a long time ago, locked up their ETH, and a lot of people don't want to do that. So there's less ETH stake than there could be. And also right now, there's no fee revenue or unburnt fee revenue, and there's no MEV going to stakers, which post-merge there will be, which means that we should be seeing, 10% plus APY. At the moment, it's 5%, which is still amazing. I think 5% APY on ETH is incredible because it's not a US dollar denominated yield. It is an ETH denominated yield. So even if you're only getting an extra 5% ETH, I mean, the ETH price can go up 10x in a year. I mean, it basically went up from $600 to $5,000 in a year. So you've gotten a lot more than 5% by staking, right? So when you look at that, it's a much more attractive opportunity. But I don't think people's brains work like that, unfortunately, especially if they're newer people, but that's okay. 263,000 validated, that's an awesome milestone. As I've mentioned before, the more validators we have, the more shards that we can have under sharding, and the more scalability we're going to have for roll-up. So we definitely want to keep seeing that number go up, and it does go up. Obviously, every validator has a 32 ETH deposit minimum, and that goes up over time as more and more people stake and more validators come online there. So awesome to see all that. And, I wrote about this a bit in the Daily Gwei newsletter today, but so much has happened around the ETH2 effort over the last year since the Beacon chain went live, and we had the first network upgrade go live for the Beacon chain called Altair, which laid the groundwork for light clients support, and also did a bunch of changes around slashing and penalties and things like that to bring them more in line with the spec. We had a lot of work be done on the merge, because obviously the Ethereum network is not a quote-unquote official proof of stake network until we've merged into one network, because right now we have two. So there's been a lot of work being done there. Client diversity is great. We have 5 clients now live on mainnet for the Beacon chain. So just absolutely amazing progress across the board on everything. And as I mentioned before, the merge is making great progress. They have the Kintsugi effort right now. There's a bunch, I think they're up to milestone 4 out of 6. So they're definitely on target. I'm expecting milestone 5 this week, and possibly milestone 6 next week, or even maybe the week after, and then we get that long-lived DevNet through the holidays, so that we can test and monitor that, so that we it seems like we're on track right now for maybe a Q2 merge, and that's my own estimate. Don't take my word on that, but I've been saying Q2 for a while, and I said that I'd tell you guys if I thought that the merge would be later than Q2. I don't see that yet. Maybe it happens in the future. I don't see it yet. I'm still thinking that Q2 is the time at this point in time. But yeah, once again, happy birthday to the Beacon chain. Looking forward to another year of it, and hopefully by its next birthday, almost certainly by its next birthday, it won't be the Beacon chain's birthday anymore. It'll just be Ethereum's birthday again. How do you do that? Because Ethereum 1 has its own kind of like birthdays, because it went live July 30th, 2015, and Beacon Chain was December 1st, 2020. So does ETH kind of like get reborn when we do the merge? Like say the merge is like June 1st, just a random date. Is Ethereum's new birthday like June 1st because we've merged the networks? I don't think so, because you still have like all of the previous kind of state and history of the current ETH1 chain, and you have all the previous stuff of the kind of like ETH2 chain from December 1st, 2020 as well. So even though they merged together, they still kind of like have their history. So I don't know how we're going to play that, how we're going to celebrate that, but I feel like we're going to just celebrate merge day going forward, as that would be simpler. At least that would be my vote. And speaking of ETH2, Flashbots has put together a working group to collaborate on the development of a neutral MEV software for ETH2. Now, a lot of you will know about Flashbots already. They're the kind of MEV group working, the group working to democratize MEV on ETH1 and building a lot of cool tools around that. Now they're looking to do it with ETH2, which is only natural, right? MEV is not going to go away with ETH2. It is going to become actually a bit more complex, I believe, because it's kind of like the way staking works and the way mining works is a little bit different there. So yeah, this working group is being spun up. If you want to learn details about it, you can go read this blog post, but they already have like a bunch of members in this working group that are core to ETH2 kind of infrastructure, such as kind of like Bison Trails. You have Obel here, Rocket Pool, of course, and a bunch of other staking providers, ETH staking community and stuff like that. So looks like a very solid effort here, and I'm looking forward to seeing how that all shakes out. In kind of like changing kind of lanes here, in regulatory news, there's some very good news coming out of the FATF guidance, or the Financial Action Task Force guidance here. So Secretary Yellen has said that the recent guidance from FATF on cryptocurrency is consistent with FInCen regulation, i.e. that it does not cover hardware wallet manufacturers, providers of unhosted wallets, software developers, or miners who don't take custody of funds. This is huge, guys. Like, remember all that regulatory FUD there was? Remember how I told you guys it was kind of like a nothing burger? It's just not going to happen like that in the US. Well, it's not. This is what's going to happen. It's going to exclude basically all the non-custodial solutions, which is brilliant, because it shouldn't include them in the first place. The only I guess like entities that should fall under these kind of like regulations are the centralized entities, such as the centralized exchanges and other centralized services out there. Definitely not the self-custodial services, things like DeFi, hardware wallets, all that sort of stuff. Definitely shouldn't fall under it. So really great to see some good news on the regulatory front there. And you know, this isn't binding, as Jerry Brito from Coin Center kind of like says here. This is just guidance right now, and I think the way it works is that FATF will give guidance, and then eventually it'll kind of like become a kind of like a regulation, or become law, but right now it just exists as guidance. But this is much better than what we've seen in the past, and you know, I'm really enjoying seeing more positive regulatory news come out. Not that the regulatory, like the bad regulatory news, really has any adverse kind of like effect. I think it's funny, because if it did, the crypto industry would have died a long time ago. There's been a ton of regulatory action, you know, big and small, over the years on certain providers. But crypto is not only decentralized, it is distributed around the world, right? Where you can't just have the US say to every other country, hey, you have to follow our guidance, you have to follow our regulations. Yes, it has allies that will follow, but you know, most countries won't follow the US. There's a lot of them that aren't actually allied directly with the US, and won't follow what they say when it comes to this sort of stuff. Especially, you know, the funny thing is, a lot of the ones in kind of like Europe, Middle East, Asia, definitely not going to be kind of listening to the US, maybe the UK and Australia, because they're like, and Canada, very close ties to the US there. They may follow in their footsteps, which they typically do, but you know, there's more than half of the world's population that live in countries that do not follow what the US does, which is good. I mean, that means it's, you know, crypto is distributed, and there are people working in the crypto industry all over the world. It's not just concentrated in the US. Yes, the US is a big part of it, but it's definitely not doesn't have a monopoly on it, which is really great to see as well. So great to see this very positive regulatory news out of Secretary Yellen today. Reminder, Gitcoin Grants Round 12 kicks off today. So this tweet was put out yesterday, I believe. So yeah, this kicks off on the 1st of December until the 16th of December. So you guys know the drill with these matching rounds. There's $1.5 million in the matching pool this time. Wait, no, that was 10 days ago they announced $1.5 million. Now it's over $2 million of matching funds. Crazy. This is going to be the biggest round yet. So yeah, you know the drill. Just go to Gitcoin, go to the grants section and donate to all of your favorite projects and it'll be quadratically matched by these matching funds. Of course, the Daily Gwei and ETH Hub are on there. Feel free to make a donation if you want to. No obligation, of course, but be sure to donate to all the other awesome projects on there that you like. I have a cart on there called Sasso's Cart of Love. I'll probably share it at some point on Twitter, where I've kind of basically curated a list of grants that I donate to every round, but I've got to kind of go through it and edit it and add new grants or remove old grants from it because, obviously grants change between rounds. It's usually 3 months between these rounds. So yeah, this will probably either be kicked off by the time you watch this video or be going live soon today. So definitely go check out Gitcoin Grants Round 12. Do not forget to donate. As usual, I'm going to be kind of like reminding you guys every few days, be kind of like pestering you about it. But you have 2 weeks from today, just over 2 weeks from today. All right, so this amazing thread from Dom here, and Dom's a frequent kind of Daily Gwei Discord participant, and shout out Dom, I'm covering you on the refuel for I think the first time. You're taking Polynow's spot today. I don't have anything from Polynow, but basically this tweet thread from Dom describes something that I've been talking about on the refuel for a little while now, but puts it into such a great kind of like packaged tweet thread and in such, better words than what I think I have been putting it into in the refuel in the past. But essentially the TLDR of this thread is Dom basically making the case that with rollups, you're going to be able to spin up a kind of like new quote-unquote blockchain, right, within kind of like minutes, just like you can spin up a kind of a new token within minutes on Ethereum, right, and get like kind of liquidity. And the first example Dom uses is they say, back in the day, if you wanted your own coin, you had to roll out a whole blockchain for it and get listed on exchanges. That's inefficient, right? I mean, extremely inefficient because to spin up your own whole blockchain, you have to do a number of different things, and especially to get it listed on an exchange, very, very hard. Then Dom says, then Ethereum showed up and allowed tokens to be created and traded on DEXs within minutes. So basically flatten that completely. And then Dom says rollups are the next logical step. And that's because, as I said before, spinning up a rollup is super, super easy. Spinning up a whole new blockchain is quite difficult. And especially if you want your token to be tradable, it's quite difficult. So why not spin up a rollup, create an ERC20 token, get it listed on DEXs, and away you go, right? Do liquidity mining, do all you want, and centralized exchanges will follow from there. So, this thread just packages together a lot of kind of what I've said, a lot of new ideas from Dom actually. A lot of really cool comparisons as well. I especially liked one of these comparisons about, they kind of say here, why do companies pay top dollar for AWS, right? Amazon Web Services. It's cheaper to pay up than roll your own servers and pay for maintenance, bandwidth, security, etc. So Ethereum will essentially become the AWS of blockchains in that aspect since the infrastructure is already there. I loved this comparison because I hadn't actually thought about it in this way before, but it makes perfect sense. Yeah, there's the sole reason why people use AWS instead of most people instead of spinning up their own servers is because of these costs, right? These extra costs. Like it's actually cost a lot to have your own server depending on what you do in terms of like maintenance, bandwidth, security. So ideally you want to outsource that, and that most companies do outsource that, and it works really, really well. Amazon obviously benefits greatly from this, but it works really well. So the same thing applies to blockchains. Why would you go and spin up your own kind of blockchain, go and do all the really hard stuff and the inefficient stuff when you can just spin up a rollup, get Ethereum security, because you get AWS's security by using AWS, by the way. Securing your own data center, your own kind of like server, and your own network is actually quite difficult. People even struggle still to do it on AWS, but AWS makes it easier than doing it on your own. But that's what Ethereum's going to do for rollups. So give them that security. And then you'll be able to kind of like leverage the consensus as well, so you don't have to spin up your own validator network or anything like that. Of course, you want to decentralize out your validators, but that's much easier to do on a rollup than it is to do on a base layer blockchain. And you don't have to worry about kind of like the insane imbalance between paying for security and fees generated by the network, which is a problem that Solana has actually, by the way. And Dom goes through it in this thread where Solana is generating, I think, I don't know what the exact kind of figure was, maybe $80 million of fee revenue a year or something like that. Whereas it's paying out like billions of dollars of staking rewards to keep that infrastructure going. Oh, here it is. So validators obviously in Solana need SOL to cover expenses. Solana collects $90 million in fees and rewards validators with $5 billion a year. So there's a $4.91 billion deficit that is paid out in inflationary rewards. Ethereum is not going to have this issue as a network at layer 1, and then at layer 2, they can just leverage all of this layer 1 stuff. Obviously, at layer 1, Ethereum's going to have perpetual issuance, but it's going to be offset by the burn. And the most beautiful thing about the burn, and I've said this before, but I still think this is the most beautiful thing, is that you cannot fake it. You cannot fake traction, because to fake the amount of kind of value that's being generated, the amount of fees that are being paid, you would have to pay $50 million a day to fake this, and most of it is burned. So it's not like miners can play games either and kind of like drum up the fee revenue but just pay themselves. No, because it's burned. So unless you're uber rich, I mean, you can't even be uber rich, because even a billionaire would run out of money really quickly doing this, right? Like imagine you're burning $50 million a day for whatever reason. Even the richest person in the world will run out of money pretty quickly. And you'd have to have liquid cash as well, or kind of like liquid ETH, I guess. And by doing so, you're just going to drive the price of ETH up anyway, because you're burning a lot of ETH, even on top of the natural demand. So from that perspective, that's why I love the fee revenue kind of thing, is because it just cannot be bought. It cannot be faked. It cannot be kind of like I mean, you can do little things like liquidity mining and stuff to drum it up. But the thing is that a lot of these other blockchains are going for the more scalable approach. So they're going to have to actually rely on insane amounts of usage in order to drum up the fees to the same aggregate level that they are for Ethereum. Whereas Ethereum just has to rely on like high value transactions to pay those fees, because obviously people paying the fees are doing so because they're extracting more value than what the fees are worth. So I think that that's an amazing perspective right there when taking that all into account. But anyway, I highly suggest going and reading this whole thread from Dom. Absolutely amazing thread. Great to see them getting more followers. I think when I followed them, they were under 400. Now they're up to almost 600. Recommend following them, because I have highlighted them on the refill before. I just remembered with this tweet the other day, when they basically put together kind of like this chart that I showed the other day showing what kind of like the ETH price and kind of like, how it's all a symbiotic relationship with kind of like the ETH price and the Ethereum network and the fees being paid and all that sort of stuff. I talked about it the other day. I'm not going to go over it again. But yeah, keep it up, Dom. I love this sort of stuff. I love more and more people talking about this. It can't just be me all the time, guys. Like, I'm one guy. I try to get all the information out there, and I'm happy to retweet and share anything you guys put together, whether that be on Twitter or kind of like on a blog post on Medium or wherever it is, or even on Reddit. I'm happy to highlight it, happy to retweet it, because we need more people in the Ethereum army. Like, I'm not a god, unfortunately. I can't do it all myself. And I said that I wouldn't even get involved in the fights on Twitter anymore. So, and I don't even do these threads too. It's just, I used to do these threads a lot, but I've kind of replaced threading with the newsletter and the videos. So you guys can be the thread doors, as they're called, right? And I'll definitely signal boost you and get you kind of like more followers, so you can keep kind of educating, because I think it's critically important. Obviously, I'm always talking about that. But yeah, great thread here, Dom. Really liked it. So Martin Koppelman from Gnosis put out this thread today about a merger that's happening between Gnosis and the xDai chain. Now, I was requested to cover this. I had seen this playing out over the past couple of weeks, but there was a reason why I didn't cover it yet. And it's because I was waiting for it to get to this stage where it looked like it was going to go through, because I'm going to give some controversial opinions here. Many people won't like me for giving these opinions. But it looks like it's going to go through. It looks like the Gnosis chain is going to merge with the it looks like Gnosis is going to merge with the xDai chain and create something called the Gnosis chain, which is, from what I understand, supposed to be kind of like the Kusama to Ethereum. So for those of you who don't know, Kusama is like a... they call it a kind of like a kind of sister network to Polkadot, where more experimentation happens. They kind of play, it's more centralized. People play kind of like harder and looser on that chain. They don't call it a testnet, but in my eyes, it's a testnet. But it's got like an economic value attached to it and things like that. But that's what kind of like, from what I understand, Gnosis chain is trying to be. It's not a layer 2. It would be a side chain. It's going to be using the beacon chain consensus, and it's going to be basically implementing upgrades on, Ethereum core protocol upgrades before Ethereum does it. So it really does look like a testnet, right? Now, as I said, it looks like this is going to go through. The Gnosis chain is going to become a thing. But the reason why I don't like this is because is the same reason I didn't like Kusama and for Polkadot in the first place. Because what ends up happening is that you split the communities because you have two tokens. You have the DOT token and then you have the KSM token. And from what I can tell, they're not really symbiotic because it's not like a rollup that sits on top of Ethereum and it could have its own token, but it's still paying the ETH layer 1 fees, right? Like it still has to pay it, still has to burn ETH. Whereas from what I understand, Kusama doesn't have to touch DOT ever. It just has to use its own KSM token. So then you have a split of both the kind of like the communities. You have an economic split there where there's competing interests and competing incentives. So Kusama actually ends up being a leech on Polkadot instead of being symbiotic with it. And that has seemed to play. I had this thesis a very long time ago about this. Like basically, I think it was in 2019 when people were discussing incentivized testnets for Ethereum. And I had the same thesis back then that I just figured it would leech value and be parasitic to Ethereum rather than additive. And that seems to be playing out in the Polkadot and Kusama ecosystem. So that's the exact same reason why I don't like this, because it does compete with Ethereum. It's going to have its own token, from what I understand. It's going to have the stake token, I believe, on there, or the GNO token, one of the tokens. I can't remember off the top of my head. And it's going to basically be competing with ETH as its own as its own ecosystem. It can be a side chain, right? You can probably argue, aren't these other side chains like the Polygon POS chain and the Avalanche C chain and FInCen and all that competing with Ethereum too? To an extent, I guess. But there are kind of it's all about kind of like how the community kind of frames it, because you guys know I'm an advisor to Polygon, so I'm going to try not to be biased here. But I actually think the Polygon POS chain is fitting the role that the Gnosis chain is trying to fit right now. But the reason why I don't consider the POS chain to be parasitic is because they're building. Because Polygon is building rollups, right, as well on top of that. And they've socially signaled and said many, many times before that the POS chain is just a short kind of like stepping stone to getting to rollups, to getting to the proper layer 2s. They don't want the POS chain to be like the long-term thing that they have. They want the rollups to be the long-term thing that they have. Whereas something like this, where it's building itself as kind of like a sister network to Ethereum, right? I don't think it's built itself as a test net, but it kind of like is that. And it's like it's got its own kind of economic token attached to it, and it doesn't actually share security with Ethereum. It doesn't even pay Ethereum for anything. When I look at it like that, that's when it starts to break apart for me. And I just think that it is not healthy to split the communities like that, and to split kind of like the cohesion in the Ethereum community like that, because I haven't seen that happen with the other kind of like kind of things like the Polygon POS chain, but I have seen it happen with Avalanche stuff, because obviously if you are on the Avalanche C chain, even though it's an EVM chain, you're holding kind of like AVAX tokens. The AVAX is the native token of that chain. Well, then you are part of a different community now. I mean, there's obviously a Venn diagram and there's overlapping, but there's a lot of Ethereum people who don't hold AVAX and don't care for Avalanche. And just because you're using a kind of like the EVM doesn't mean that you're the part of the Ethereum community, right? Doesn't mean you're actually being additive to Ethereum and to ETH's value. So that's kind of like how I look at it. Maybe it's a bit of an esoteric thing. Maybe I'm being too harsh here. But I just, from what I've seen play out with Polkadot and Kusama, what I've seen play out in terms of things being parasitic instead of symbiotic, I'm not a fan. And maybe I'm biased, and maybe I'm wrong. I don't know. I'm curious to hear you guys' thoughts on this as well. But I just, from what I can see right now, I just don't see the point of something like this. I would have rather xDai maybe pivot to being a roll-up and Gnosis help with that. That would have been better in my eyes, but they seem to want to be able to control the consensus as well. And to do that, you need your own blockchain. Because rollups can't control the Ethereum layer 1 consensus, but whereas sidechains can, because they have their own validator set and they can do whatever they want. They can implement the beacon chain if they want to, which is what Gnosis chain seems to be doing or seems to want to do, or any other consensus mechanism. They can modify it if they want, whereas rollups don't have that kind of like luxury. So I get it from that perspective, but then if you start doing that, in my eyes, you are a competing ecosystem. You are parasitic, and it's very, very hard not to be, in my eyes. But anyway, happy to get pushback on that. Let me know either in the comments or in the Discord channel if you disagree with me on that. But yeah, it looks like it's going to go through anyway, so we're going to see this experiment play out. And if I'm wrong, I'll be happy to admit it. But I think it's going to take a little while, maybe 6 to 12 months before we see any tangible results from the Gnosis chain here. All right, so speaking of Polygon, they have announced that they're hosting a zkSummit with ETH Global on December 9th at 11 a.m. Eastern Time. You can join the leading lights of the zero knowledge space for a discussion about the future of ZK stocks and applications of ZK proofs. So Paul Brody will be there, Chaitanya Konda will be there, Jordi Bailina, and Bobbin Threadbare. Now, Paul Brody's obviously been at EY for quite a while, been doing a lot of stuff with Nightfall, which Polygon is now... which is now under the Polygon kind of like ecosystem. You have Chatyana Konda here, who does cryptography and blockchain research with Polygon Nightfall. Then you have Jordi Bailina, who's part of Polygon Hermes, basically the technical lead of that team there. And Bobbin Threadbare, which is the recent addition and the technical lead on Polygon Maiden, which is their Stark-based rollup. So if you're interested in everything ZK, be sure to give this a watch on December 9th, or you can watch the recap, which I'm sure will be on YouTube. And speaking of Polygon again, Wintermute, which is a very active market maker and kind of like liquidity provider within DeFi, has announced a $20 million venture fund today, which will be dedicated to projects running on Polygon. This is really, really cool to see. I know it's not as big as the $1.5 billion fund that was announced yesterday, but a $20 million kind of like laser focused fund on one ecosystem can do a lot, can really fund like small nimble teams that can grow into much bigger things, and especially on something like the Polygon network where you can do more experimentation because it's cheaper, but not just the Polygon POS chain. I'm sure they're going to be investing in kind of like the roll-up based teams as well. So really, really cool to see this. Cool to see market maker liquidity providers getting more involved in the venture side. But at the same time, there's a lot of venture funds now, right? I'm seeing on Twitter right now that there's a lot of drama around VCs and how many there are and what's a VC, what's a fund. And I discussed this the other day, and I think on the AMA I discussed this, where I basically said the lines between venture and venture firm and a hedge fund or a fund are completely blurred. This industry has just like completely destroyed those lines, and it really just seems like there's not many true VCs left. There's a few of them out there, but not many of them left, unfortunately, because the way the incentives work in this ecosystem, early liquidity, you can't be like a 5 to 10 year fund because you get liquidity within like maybe even a couple of months of investing, right? I guess you have lockups and stuff, but still it changes the incentives there. But anyway, still cool to see Wintermute do this. I'm going to power through this because I noticed I'm coming up on time. There was a lot to get through today. So ZKOPRU or ZKOPRU is now on Testnet. Now, for those of you who don't know what this project is, it's basically another privacy preserving project, or another privacy rollup, but not a ZK rollup, an optimistic rollup, but it's using zero knowledge proofs to make individual transfers private. So it currently, and this is on testnet as I said, and it currently supports deposit, transfer, and withdrawal of ETH and ERC20 tokens with NFTs coming soon, which is really cool. I haven't really seen any private NFT implementations done before, but this is cool. I heard about this project a while ago, and I hadn't heard about it for up until recently, but it's great to see that they're live on the Goerli testnet now. It means mainnet should be coming relatively soon as well. So if you want to learn more about it, if you want to learn how to kind of like interact with it, all that good stuff, check out the blog post. It'll be linked in the YouTube description. I'm going to just power through the rest of these updates because I'm coming up on time here. Premia, the options protocol that I spoke about the other day, is now live on Arbitrum. So you can do single-sided staking with wrapped Bitcoin, wrapped ETH, Link, Call, and xDai put pools. And they're capped at 5 million to begin with because they're doing a guarded launch, I assume here. So yeah, if you're looking for a new thing to play around with on Arbitrum, definitely give Premia a try. And especially, like a lot of you probably haven't even played around with an options protocol before. They're more of the exotic kind of financial products. So definitely go try that out as well. But make sure that you're trying it out with money you can afford to lose, because options kind of stuff is, I mean, as I said, it's an exotic financial product. It's not something that normal retail investors usually play around with. So just stay safe out there, guys, with that sort of stuff. But still cool to see another app go live on Arbitrum. Little Cohen's proposal that you may remember about how he's submitted a proposal for Uniswap to incentivize liquidity on L2. It looks like it's going to pass, his latest kind of proposal here. So I think I checked it just before. I don't know if there was a link here. Yeah, there's a link here. If I go to the snapshot, it's really awesome to see that it looks like it's actually going to pass. So if I scroll down a bit here, you can see, I showed this the other day, but you can see that the yes is now at 9 million uni and no is only at 214,000 uni. So that 500,000 kind of like vote against from T11S seem to have changed to a yes now, and there's only a few stragglers left that have kind of like voting no. So this is really cool to see that this is kind of, yeah. So this is the consensus check. Should Uniswap incentivize liquidity on Optimism and Arbitrum? Oh, wait a sec. I'm getting my proposals mixed up here. T11S voted against the Polygon, the Uniswap on Polygon proposal, not this one. My bad, guys, my bad. But this one got rejected last time from another whale or delegate whale that was voting against it. But this time that delegate whale doesn't stand a chance because, the yes votes are at 97% right now. So awesome to see this. It looks like Uniswap is going at L2 on Optimism and Arbitrum is going to be getting liquidity mining rewards. This should really help to bootstrap a lot of liquidity on there. And it's about time. I mean, these L2s, all they really need is a bit of a push, and we'll get the explosion and adoption that we're kind of like hoping we will get from these sorts of things. I definitely think that it's going to be a nice next few months for the L2 ecosystem there. Speaking of L2, TokenSets is teasing that they're going to be on Arbitrum and Optimism. So you can see here that they're already on Ethereum and Polygon, and in this drop down they've added Arbitrum and Optimism. So really cool. Can't wait to see them live on there. You guys know that I used to work at TokenSets and still an advisor to the team. They're building a lot of cool asset management products, and I think unfortunately they've been held back by the layer 1 gas fees probably the most, because it costs like hundreds of dollars to do anything with sets, especially the earlier ones. So now that they're going live on, kind of like they went live on Polygon, but now they're live on the L2s, more scalability for them, which is really awesome to see there. And the last thing was another chart here from Data Always asking, if scarcity is your main narrative, who would you rather be? And then he's got a chart here showing the annualized inflation rates of ETH and BTC. So the 30-day average Bitcoin inflation rate is actually higher than the 30-day average Ethereum inflation rates since ERP 1559 went live. So Ethereum is on net issuing less ETH than Bitcoin is issuing BTC, over the last 30 days on average on net. That's insane, right? But it's expected. Like, I knew this was going to happen because I kind of like did the napkin math at the time. And then this is just basically going to drop even way further once the merge happens, when we have that 80 to 90% issue introduction. So just pretty funny to see this, because Bitcoin is hard-coded with what they can do. They're only going to be halving every 4 years. The next one isn't till 2024, then 2028, of course. I mean, we're having our 80 to 90% issue introduction next year, within maybe, 7-ish months or something like that. They're going to have to wait until, I think, mid-2024 or roundabouts that, or I think it was May or something, to kind of like get that. So yeah, it's going to be interesting to kind of like see how that plays out. I think it's 2024 if I'm doing my kind of like, if I'm remembering correctly there. But anyway, I'm going to leave it at that. I'm at time here. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give the video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.